Guys, welcome back. In this video, I have brought you on some from corporate accounting. This is one of a base level problem from corporate accounting, and it will give us a good kickstart for a corporate accounting subject. I hope so. And this problem is from the first chapter, and these are all just 12th grade chapters, 12th grade problems. But this is one of a comprehensive problem I have brought you. So if you well understood about this one problem, you can handle any kind of problem from this area. That's how I picked this sum. And let's get into the problem. Okay, the topic is issue of shares and interest calculation and written off with the P&L account. That's what this sum is. And there is a B limited issues 2000 shares, right, at rupees 10 plus 10 percentage premium, which is 10 rupees, right? Okay, on 1st April. Okay, let's make it a box. And 1st April, what they say, application rupees 20. 1st June, allotment including premium rupees 40. 1st July, first call rupees 30. Final, sorry, this 1st August, right? 1st August, we have a final call rupees 20. Okay, that's it. We have just make this question in a pictorial format, and let's read furthermore. Applications were received for 1800, so they have issued 2000 shares. Only 90% of shares were subscribed, that is 1800 shares. And directors made allotment in full. One shareholder to whom 40 shares were allotted paid the entire balance on the shareholdings with allotment money. Okay, what they are saying is, one shareholder who owns 40 shares fully paid at this level itself. What is this? This is advance. So furthermore, another shareholder did not pay allotment and first call on his 60 shares. Okay, he did not pay allotment and first call and entirely, but which he paid with final call. Okay, entire amount is paid on final call, so he did not pay allotment and the first. Okay, right. Interest should be received at 5% per annum on calls in arrears. Okay, this not paid is arrears. At 5%, the company is charging interest. Interest should be paid 6% on calls in advance. This is advance. Interest has to be paid to the shareholders at 6% interest. Okay, this has been mentioned in the articles of the company. So what else? And calculated the amount of interest paid and received on calls in advance and calls in arrears respectively. So as on 1st August 2023, we need to find what's the interest for calls in advance and calls in arrears. Let's get into some. And in the question, they have asked only for the interest paid and things and all, but we are going to prepare a journal also for this entire sum, and we are going to get a grip out of this sum, right? Okay, let's get into this problem. The first thing, so what they are saying, interest paid on calls in advance. Let's take this as a timeline. Okay, 1st April is application, 1st June, 1st July, 1st August. Okay, calls in arrears. So calls in advance. Actually, he has to pay only rupees 40 on 1st June. But with that money, he also pay the entire entire share value during the allotment time period itself. So the company has to pay advance for that money. Sorry, interest paid for that money for that advance. So what could be the for price for 1st July, which has been paid in June itself, which is rupees 30? What could be the price for August, which has to be paid, which has been paid in June itself, which is 20? So total amount paid by the investor is rupees 90. In the June itself they paid. What about the calls in arrears? The June itself, the June they have to pay rupees 40, not paid, and during July he has to pay rupees 30, which is not paid. And during the August he has paid the entire balance, which is rupees 90, right? So this is an overview. So how we can calculate the interest? Let's get to this problem. Okay, interest payable on calls in advance. So on first June he has received 40, but he has not supposed to receive 30, but this 30 is to be received on July. So for on July 1st, on 1st July we have to pay interest for this entire 15 rupee entire rupees 50 we have to pay interest for how many shares on calls in advance, which is which is 40 into how many percentage, 6 percentage, into how many months, 1 month, right? So if we calculate 50 into 40 into 6 percentage, there's a bit one, which is 10 rupees. 1st August, what could be the interest? So on 30th, rupees 30 will be exhausted on 30th. So balance how many will be in the calls in advance column? Only 20 rupees. This 20 goes here. Okay, for the 20 we need to pay interest, right? So rupees 20 into 40 shares into 6 percentage into 1 by 12. How much? 20 into 40 into 6 percentage divisible by 12, which is 4. Okay, rupees 14 is a calls in advance, right? So I hope you guys have understood. Let's find it out for interest payable on calls in interest receivable on calls in arrears. Okay, on first July, okay, what could be the interest that we are supposed to receive, which is he didn't pay he didn't pay the allotment money for the last 1 month, so we need to charge 1 month interest, right, on 1st July. So which is 40 into 5 percentage, which is chargeable percentage, 40 into 5 percentage into how much, uh, 40 in 40 is 40 into 60 shares, right, into 5 percentage into 1 month. For 1 month The shareholder didn't pay any money. So 40 into 60 into 5 percentage divisible by 12 gives us rupees 10. On 1st August, what could be the interest receivable to the company into the company? So as usual, the 40 and 30 amount was not received, right? So 40 and 30 was not received, so we have to charge interest for 70 rupees for 60 shares into 5 percentage into 1 month. 70 into 60 to 5 percentage divisible by 12 gives us 17.5. So it totals to 27.5, right? So that's it, we found the interest payable on calls in advance and interest receivable on calls in arrears. Let's get into the, and we finished with the interest part. Let's get into the journal area. So, okay, journal entries. Okay, what could be the first entry? First, we have received the amount of amount for 1800 shares, right? 1800 into application money, which is rupees 20. So 1800 into 20, which is 36,000, to share application account, which is 36,000. So people have been subscribed for 1800 shares. And the second entry is we are allocating the shares to the shareholder. That is share application account debit to share capital account, which is amounted to 36,000. 3. First we have to allocate shares, right? Share allotment account debit to share capital account to securities premium, right? We are receiving a securities premium at the period of allotment, at the time of allotment. So what's the securities premium, which is 10 percentage, is 10 rupees. So 1800 into 10 rupees and 1800 into 30. How much? 1800 into 30, 54,000, 18,000. So totals to 72,000 share allotment money. How much could be the receivables? Here, during the allotment, we haven't received money for 60 shares and we have received advance for 40 shares. So we have to account all of this, right? So what is calls in arrears? Calls in arrears is more similar entry like debtors. So it's an asset for the company. So calls in arrears should come on debit side of the journal. Okay. So what else? If we receiving the money, the for what we are receiving the money for share allotment, right? So share allotment, bank to share allotment account. Okay, calls in advance, we are receiving 40 shares money in advance, right? So that's a liability to calls in advance. Okay, so this is the entry for calls in arrears and calls in advance happens at the same time. Calls in arrears denotes asset, calls in advance denotes liability, and that's it. Okay, so share allotment, what's the share allotment money that we have to receive, which is 72,000, that comes comes from here to here, here to here. And the calls in advance, how much money we have received. If we had at that time, he has paid the entire money. So right, 40, 30 plus 20. So he has paid surplus of 50 rupees. So 50 into how many shares which is been paid? Okay, 40 shares. So 50 into 40. 50 into 40 gives us, okay, 2000. Okay, what's the arrear? How many shares were 60 shares? 60 into 40, which is 2400. So if we deduct everything, 70,000 plus 2000 minus 2400 gives us 71,600 as a balancing figure. We can also uh, find this value without finding it with the balancing figure method. How? That is, let's stay 1800 shares we have to receive the allotment money, right? In that, 60 shares were not paid, right? 60 shares have been not paid. So how many shares we have been received the money? So only 17,040 into what's the allotment money, which is 40, 69,600 plus advance money 2000 gives this value. So we are just simplifying the process by balancing it, by balancing it through balancing figure method. So we can also find it through this method. So this is how the amount receivable to the company should be this. And let's go to the next entry. And okay, I'm not entering the dates, right? So that's wrong, that we have to enter actually, which is the application date. Okay, this is on 1st April, right? 1st April. Okay, 1st April. This is also on 1st April. This is on 1st June. This is also on 1st June. So we are entering into the month of July. 1st July. So we are, as usual, we are allotting the first call share capital. We are allotting the first call money. We are creating the due entry, which is share capital account. How much? Just first call 30 for 1800 shares. 30 into 1800, which gives us 30 into 1800, 54,000. Okay, so now we have to receive the money, right, from shareholder. So bank account. And for July also, 60 shares have not been paid, so calls in arrears. For this month also, calls in arrears account debit. And we have received money in advance for 40 shares, right? So that has to be reversed here for this month. To share first call account, so this amount has to be come here. And how many shares have not been paid, which is 60 shares. So 60 into 1008, sorry, 60 into how much, first call is 30, right? So 30 and 40 into 30, so 1800, 40 into which is 1200. So we only received 51,000 the net cash. Okay, let's enter into the last month, which is August. 1st August, share final call account debit to share capital account. So what's the final call money, which is 20 for 1800 shares. right? 20 we are supposed to receive, and that is the total money. We have created the due entry, and we are now proposing to the receivable entry. As usual, bank account debit, calls in advance account debit to share final call account. And at the end of the month, at the end of the period, which is on 1st August, 40 shares which were not 60 shares which were not paid till date has been fully settled, which is calls in arrears, right? So how much have been accumulated to the balance of calls in arrears? 1800 and 2400, which is 4200 is calls in arrears. Share final call. How much is the share final call? 36,000. Okay, calls in advance. Okay, what's the calls in advance balance which has to be settled here, which has to be adjusted here? That is 40 shares into 20 rupees. 40 into 20, which is 800, I think. 800. So let's balance it. 36,000 plus 4,200 minus 800, which gives us 39,400. That's it. On this date, until this date, we have entered all those entries, and we are now proposing to interest entries. Right now, we are creating the due entry. Yes. We are creating the due entry, which is interest receivable entry, interest payable entry, return of entry, return of entry, received entry, paid entry. That's it. Three entries for all three entries for both calls in arrears and calls in advance, right? So right, let's get into this value we have already found out, right? 14 and 27.5, which is what we are going to use here. So interest receivable entry, when it comes to interest receivable entry, this is our income, right? So interest on calls in arrears should come at credit place. How much is the value? Which is 27.5. So you are creating the receivable entry for 27.5. As same as if you are paying interest, then it's our expense. Interest on calls in advance, account debit to shareholder, he becomes our creditor. So how much? 14, 14, 14. Okay, now we have to return off into the P&L account. P&L account, return off entry. How we can return off? So if it is a income for our company, then P&L has to place on credit side. If it is a expense to our company, then P&L has to be placed on debit side. I hope you guys have understood the logic. This is why the P&L account has been, because P&L debit side takes the expenses part, and P&L credit side takes the income part, right? So we are placing it P&L on the credit side for the income entry, right? So just as simple as that. Interest on calls in arrears account, which is 27.5, we have written off written off to P&L account. 2. Interest on calls in advance account, which is 14 14 rupees, right? So if you have received, then what could be the entry? Bank account debit to shareholder, from where it came. 27.5 came, and we have paid to whom? To the shareholder. Account debit to bank account, which is what? 14. That's it. I hope you guys have understood. Let's give a recap for this problem. So this is one of a base level chapters from the corporate accounting, and what is this chapter is about? This is a issuing of shares, and how we are collecting the money at different installments from the shareholders. So the company has proposed with 2000 shares, and 90 percentage have been subscribed, which is 1800, issued on premium 10 percentage. On 1st April, application received for 20 rupees. On 1st June, 1st June allotment money received for 40. And 1st July, first call received for 30. On 1st August, final call received for 20. On 1st June, we have fully paid. We have received the money for 40 shares in a single payment, and at the same time we have kept the we have 60 shares of arrears shares, which has not been paid on June as well as on July, and fully paid on August. And what else about the interest is interest paid on calls in advance. 1st April, and we have created a timeline. On the timeline, we have received 40, 30, 20 in a single payment, which is from the 40 shareholders, and we have not get the 40, 30 on June and July respectively, and we have entirely received the money on August, right? So, and so with this data, we have found the interest payable on calls in advance and interest receivable on calls in arrears. This 50 is 30 plus 20. This 20 is this 20 for and this 40 is this unpaid 40. This 70 is total of this both, right? 30 plus 40, 30 plus 20. So this is it. And the journal entry for application, share allotment, share first call and final call given, and receivable entry, receivable entry and payable entry given, return of entry given for both, for calls in arrears and calls in advance, and received and paid entry were given for calls in arrears and calls in advance. That's it. Let's see tomorrow with another chapter and another one important comprehensive problem to ace the chapter. Thanks.